Bitcoin is getting trashed, just as it was trending up last week. Why is this happening? Well, it comes down to what I hate most in this space: centralization, especially centralized actors pretending to be proponents of decentralization and becoming your own bank. So what happened and what can be done about it? We'll find out in about 10 minutes because it's time for Chico Crypto. Yeah, BTC was trending up, looking to test 25K resistance last week, but then all of a sudden, right back down to the 23K range and below, down to 21K. What caused this dip to begin? Was it just a resistance rejection and a cascade of leveraged liquidations putting pressure on the price? Well, this was not a resistance rejection due to natural market operations, but yeah, it was a cascade of leveraged liquidations caused by none other than the biggest centralized actor in the space, Binance. As we can see from this FX Street article, Binance accidentally closed all derivative positions of wholesale investors, aka they liquidated the derivative positions of all Binance traders in Australia. Here is a letter they sent to the investors. As you can see, Binance in January supposedly did an investigation into the onboarding process of their derivative platform, identifying investors who were incorrectly identified as wholesale customers. This user was one incorrectly identified, so they immediately liquidated and closed all their positions. And from the second letter sent to investors, if they want access to their positions and derivative accounts, they need to provide KYC and AML. AKA a bunch of leveraged positions got liquidated by the centralized Binance exchange, and that crushed the Bitcoin price. Now here is the truth of it all. Binance allowed any Australian to trade derivatives as they had super relaxed KYC and AML for the longest time, but this caught up with them. Everyone knows Binance is in hot water across the globe, and this time Australian regulators were the one hot on their trails. So they decided to just close it all, fuck every Australian investor, every customer to cover their own asses. Do you need proof? As we can see from the FX Street article, their derivative closing spree happened February 23rd. Just 2 days after this, February 25th, it was announced that the Australian Securities and Investment Commission was investigating Binance over their classification of retail clients and wholesale clients, according to a statement from a spokesperson of that commission. And remember folks, it's not just Aussie regulators. US regulators are hot on their trail too, per this article from the Wall Street Journal about them eluding authorities via text posted just last week. So, do not trade on centralized exchanges, my friends. It's not your keys, it's not your coins, not your positions. So today, I'm going to dive into the decentralized products and exchanges I believe will end up replacing Binance in the near future. Since we're talking about derivatives, we need to talk about the #1 decentralized derivative platform out there, GMX. And guess who covered GMX and their decentralized perpetual exchange all the way back in September of 2021? We did, predicting it was going to do well and eventually outrank Perpetual Protocol, who was ranked number 122 back then. Let's watch the video from September now.
But GMX is the perpetual on Arbitrum, so this is going to do well. I would expect it to rank upwards with perpetual eventually.
Back then, GMX wasn't even on CoinGecko, but it was probably around $8, so that would rank it at about 1,000 or even further down. As we can see today, GMX is ranked 79 on CoinGecko. Yeah, GMX is killing it lately. Do you need any more proof? Going to cryptofees.info, we can see over the past 7 days, GMX is accumulating exchange fees comparable to the entire Binance Smart Chain. Binance's centralized blockchain, they masquerade as being decentralized. Shoot, there are even days like last month in February where GMX is #1 on crypto fees, even outdoing Ethereum on occasions. Now, some of you may say GMX has had its time in the sun. The price skyrocketed even through this bear market. Well, let me tell you, GMX is about to go bananas here soon with the launch of a certain something. If we go to the main GMX trading page, we can see 4 assets can be derivative traded on GMX on the Arbitrum layer, of course Ethereum, but also Bitcoin, Chainlink, and Uniswap. But if we switch over to Avalanche, only one more asset, AVAX. With only 5 assets to be traded on GMX, it's dominating. So just imagine when every crypto asset and beyond can be traded on GMX. And that is coming with the launch of GMX Synthetics, expected this quarter. Just over a month and a half ago, after months of development, the first merge into the main branch on GitHub happened for Synthetics. And if we dive into the GMX Discord, developer updates are happening on Synthetics. March 3rd added the subgraph and interface for the Synthetics trade history this week. And then just a couple days ago, March 6th, we'll be working on the Synthetics interface to claim funding fees this week. Interface, aka front end, is being worked on. The back end is ready. They're just putting on the finishing touches. So Synthetics are coming soon. And this will be the upgrade which puts GMX in a position to compete with Binance and its suite of leverage options, but in a decentralized manner. Binance's leverage options is a major draw to their exchange, but there is another feature which brings even more people: their yield farming products, or what they call Binance Earn. What decentralized crypto project could eventually compete on a high level with their yield-seeking solutions? Well, before we get into that, it's time for a sponsored segment of this video, brought to you by Stablz. And like always, the full details of our arrangement can be found in the description. Stablz is a first-of-its-kind, multifaceted ecosystem, an innovative stablecoin-centric farm. They provide a lightweight approach for earning real yield on an ever-evolving protocol, built on Ethereum and ready to deploy on other chains. Stablz is a mechanism that doesn't compete with your favorite farms. They build right on top of them. Users can earn real yield by converting token emissions from yield farming through platforms like Curve into stabilized value through tried and true stablecoins like USDC, USDT, and DAI, converted in real time. This realizes and stabilizes your rewards through automated harvesting on your behalf. To put it simply, Stablz farms farms. Stablz is a game changer in the space, introducing the EVO system, an ecosystem evolution, a dynamic, eco-diverse protocol designed for sustainable evolution in an ever-changing DeFi ecosystem. Stablz was created by its founders when they asked themselves, how can we create a sustainable and ever-evolving protocol, something that can be stable in all the markets, bear or bull? They recognized and set out to solve a few problems that plague the DeFi space, such as farming isn't always guaranteed to be profitable, even on stable pairs. So they created a stable ecosystem that can adapt to an ever-changing, fast-paced DeFi landscape. The team also recognized APY yields aren't real unless the underlying reward token value remains consistent over time. Sure, yields in bull runs always go up, But what happens if you don't lock in those gains? Or how do you remain profitable when earning yield in a bear? Well, Stablz solved this issue by converting rewards into stable assets and out of the volatile rewards tokens. They also recognize the final problem, that farming is resource heavy and requires constant monitoring to be efficient and to properly secure yields. Well, Stablz solved this issue also through their automated harvesting and their simple, intuitive UI that automates the profit taking for the person, providing maximum convenience and assuring peace of mind. The Stablz platform also allows for token staking through their DApp, offering even more ways to accrue rewards. The Stablz DApp offers staking, yield farming, liquidity mining, automated harvesting, real yield, stablecoin rewards, referral rewards, community governance, and more, all in one place. And it was built with the long term in mind, designed to adapt in all market conditions. This is only the beginning for Stablz, as they have plans for future expansions, including incorporating non-stable asset pools into the platform, such as ETH and even higher APY farms, OS staking, USDT rewards, and more. Stablz fills a huge need in the DeFi space, bringing back high-yield farming opportunities to passive investors, allowing them to leverage their assets in safe farms and securing gains along the way through automated harvesting and the conversion to stable coins. Stablz is in its early stages, but it has captured the attention of many in the space. So it's time to pay attention, and it's time to get back to the action of farming rewards, but in a more stable and profitable way. So make sure to visit the Stablz website, follow their Twitter, and reach out to the team through Telegram. Links to everything Stablz can be found in the description. So, who could be that yield underdog who I believe will rally far into the next bull run? Well, that is PENDLE Finance, all the way down at rank number 649 on CoinGecko, which means it has a lot of room to grow. Why PENDLE? Well, PENDLE is a way to buy assets at a discount by speculating on future prices and yield of those assets. It lets traders control their yield once they understand the mechanics of the DApp. For example, just a couple days ago, @GabaVineB on Twitter tweeted, in terms of how I grew 5,000 to 5,528 GLP, I will explain slowly in subsequent threads, but you can trace an Arbiscan if you really want to. Now, I will just explain my current position, which is mostly 82% providing liquidity by zapping in. And then his thread dives into exactly how to do this, earning APY and a yield that dominates anything else in the crypto industry, including any of Binance's earned products. And guess what? A majority of GLP holders on GMX don't even know about PENDLE. Going to the GMX dashboard, we can see there is over $503 million worth of GLP out there. Checking out the TVL of PENDLE on DeFi Llama, just $30 million. So we can see why PENDLE's growing lately, exploding over the past 3 months in TVL. But there is more to PENDLE on why I think it will explode. Last month, I posted a video on the big narratives which will drive this bull run. Let's listen to what narrative I picked, because Ethereum withdrawals from the Beacon chain are coming in April. Although regarding withdrawals, this is going to open up a new narrative and major opportunities for altcoins who focus on LSD. Not that type of LSD, liquid staking derivatives. Liquid staking derivatives are going to rocket because of the Ethereum Shanghai upgrade. And PENDLE put out a great thread on how to use their protocol to earn big yield with the LSD tokens and this Ethereum upgrade. PENDLE checks those boxes for me. Cheers, viewers. I'll see you next time.